Hello traders and welcome to another video review. Today is Monday, February 17th, 2025. Let's take a look. What do we have in the economic calendar for today? So overnight data were quite important, especially from Japan. GDP in Japan increases from 0.4% to 0.7%, beating the expectations of 0.3% on the quarterly and yearly measures. As you can see, very good data from the Japan. GDP in Thailand is going down from is going up from 3% to 3.2%, but way less than a forecast of 3.9%. Industrial production in Japan is going up from minus 2.2 to minus 0.2%. During the London session, we got the data release from the Eurozone in form of the trade balance. This one is scheduled for 11 o'clock. At the same time, we got the Eurogroup meeting to be to start at the same time. German Buba President Nagel to give a speech at noon. Then we entered the New York session and we got the data from the Canada scheduled for release. Housing starts and foreign securities purchases. Then only two speeches left for the USA session. FOMC member Harker will give a speech at 3:30 and 4:20. FOMC member Bowman to give a speech. So very light calendar for today. Without any further ado, let's go to the charts. We start with euro dollar. For our chart of the euro dollar is showing us very nice movement to the upside, up towards the supply zone. A, B, C wave to the upside, which is corrective wave, is almost completed. Let me just take a look. 100%. There you go. 100% of the wave A measured from the wave below has been hit. So what do we have here is a geometry, market geometry of the length of the wave A measured from the low of the wave B is exactly 1.0515. This is where the market was just last Friday, and as you can see, we got a period of the consolidation. It's like a 12 hours or 16 hours of consolidation, and then down we go. So Fibonacci measurement is now fulfilled. We got ABC to the upside, market geometry. The market now is ready to move lower. Of course, the first technical support is 1.0469, then there is 1.0462, and then there is 1.0437. The market is still trading above the 100 periods moving average on a 4-hour time frame chart, and it's still inside of this channel. The key level to the upside is located at 1.0534, and this level is the part of the supply zone. So only a sustained breakout above the supply zone would likely extend this movement higher. Momentum is strong at the level of 60, is positive, however is coming off the level of 67 points. So we want to see what will happen here in a few hours, and whether the market will break below the technical support or not. So the outlook for the euro dollar is quite steady. However, the targets are met. Now the US dollar versus the Japanese yen. Let me just take a look at the daily, because you can see clearly that on the daily time frame chart. Let me just go back to the beginning. There you go. Daily time frame chart, as you can see, is looking very, very interesting. Recently we got the breakout below the trend line. So this is the recent trend line. We got the breakout below it. Let me just change the color to orange and make it a little bit thicker. There you go. So we got the breakout. There was a test, the attempt to test this level of a breakout. However, it never materialized. 154 was actually the key level here to the upside. Let me just change the color to red, because now we know it's technical resistance for us. Okay, so what do we see here? Technical resistance, bearish engulfing pattern, confirmation and extension to the downside. We are approaching now the level of 150.95. This is a local low and will act as the technical support, but way more important level is 148.66. This is the level of bigger importance. It's a technical support, so we need to bounce from this support and then continue the movement to the upside or break below it in order to move even lower. So that's the situation of the US dollar versus the Japanese yen. If there's anything else I could apply, no, that's almost everything. Very calm beginning of the trading week. Not much is happening here. Let's find out what is going on the British pound and the cable on the daily time frame chart is looking quite bullish. We broke above this supply zone and we hit the black line, and if you remember, let me just zoom out. The black line is 38% Fibonacci retracement of this big swing from 1.3444 and 1.2099. So the black line is 38% of the retracement, right? So right now it looks like the market is ready to move higher. There is a room on the RSI towards the 70 points. There is a room to the upside on the cable. This is the 100 periods moving average. It's located at 1.2685. So there is at least 100 pips to the upside to be done. So interesting situation. Let's switch to the 4-hour chart. There you go. Very nice reaction on 38% of the Fibonacci retracement. We got the pin bar here. Now we're just below this level, and this will not now act as the technical as the demand zone. It will just be the 3 levels of the technical supports, right? So this is it. There you go. 1.2524, 1.2537, 1.2549. This is the very strong technical support. This level is no longer needed. This is the trend line. Let me just find out. Maybe I think we might have some kind of a channel here. Let me apply the channel, the parallel channel here from the lows of the January 2025 back through the, let's say, this highs here. It's quite good, and now to the upside we'll go rather somewhere around, let me just go here. That one it's enough. Yeah, so let me just make it slower. There you go, and this is it. So we are moving inside of the channel. Very nice. That doesn't actually looks as an impulsive cycle, this movement to the upside towards 38% of the Fibonacci retracement, and it actually looks more like a corrective movement. We hit this 70 points on the RSI on a 4-hour chart, so the market is ready for some sort of the consolidation or maybe pullback here. So I wouldn't be surprised if the market will do it and test this levels of 1.2524, 1.2549. So this 25 pip basically technical support might be tested. Then the market will be ready to move higher. So far looking good, but there is visible bearish pressure in the short term on the cable. And last but not least, let's take a look at the Bitcoin. Yeah, the Bitcoin is here. We are still trading below the trend line. We are still trading below the 100 periods moving average, the blue line. We are still trading inside of this horizontal range, which is actually located somewhere between 94,000 back up to, let's say, 100,000. So that's $6,000 range that is being used by the market participants just to hover, as you can see, around the level of 50, little bit up to this 58, little bit down to the 38, and up and down and up and down and up and down, and nothing important, nothing serious is going on here on the Bitcoin chart, as the Bitcoin keeps moving up and down in this very narrow very narrow range. The major, of course, let me just zoom out, the major swing is still here. 89,007 is the low, 102,206 is the high. We are still moving inside of this swing range. Okay, so that you see here, this cycle is still corrective. We are below the trend line, below 100 periods moving average. There is no aggressive dynamic movement to the upside or to the downside. Volatility is very low. So as you can see, not much can be expected from Bitcoin unless we break either below the range low or above the range high. So easy, low volatility trading conditions with inside of the let's say short-term sideways trend on the Bitcoin these days. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.